Hey guys, and welcome to the Working Money channel. So I saw this from TechDev at TechDev_52 here on Twitter. Bitcoin high time frame structure is bullish. Cycle awareness is key. I cannot stress that point enough, guys. Cycle awareness is key. When we are looking at the chart here, let me bring up Bitcoin real quick here. When we are looking at the chart, Bitcoin right now trading at $58,200 as of the time of this recording. And we are looking at this structure. We're looking at this structure on the daily. I've had some people in the comment section say, oh, this is just a big double top here, and this thing is going to collapse, right? You are wrong, you are wrong, you are wrong. Well, I mean, I don't know. I mean, it could collapse. I don't want to just assume anything necessarily. However, it's very unlikely, and I will tell you why. Let's get back to this JPEG here from this tweet. So TechDev here bringing up some interesting points. This was not a double top. This is not a double top. And certainly these structures here on the chart, if you guys are not familiar with what this is the Bitcoin trend on the weekly, I believe, or maybe it is the daily, but it is just zoomed out. These structures are looking more like what we saw back in 2017 when we saw a correction before that blow off top for Bitcoin. So when in doubt, zoom out. I recently did a video. If you are in doubt, it is always good to look at the bigger picture, and I will link that up here if you guys didn't catch that. So what we are seeing now, and Bitcoin is just going to be part of this story, what we are seeing now is just another correction before we move to the upside. Let's not forget, guys, there is still a lot of mounting evidence to support the idea that Bitcoin is going to go higher. And not only that, there's good news and there's better news, because the good news is that we have not even seen that full cycle for Bitcoin. Retracing the full Fibonacci to the 4.236 would bring Bitcoin over $74,000. And some analysts are predicting that it could go up anywhere between $75,000 and $85,000, give or take. So that's the good news. The better news, though, is that this here is just another correction on our way to the upside. Okay, so giving us a theory that we could see a prolonged bull run, right? Something like this, continue higher and higher and higher until we see higher highs, right? Higher highs, continuing to move forward into the future. Now, I don't know. I do not have a crystal ball, so I cannot tell you for certain. However, there are indications on the charts that we could see a prolonged bull run. We know bull runs have generally extended further into the future, cycle after cycle. So, the first time we saw a bull run, it happened, boom, really quickly. Second time, it took a little bit longer. The third time, it took a little bit longer than that. So there is this theory, right? We also have to put into perspective what is going on around the world. Institutional money has never been so interested in Bitcoin and cryptocurrency as a whole. So that is also something that we should be paying attention to. Like this, for example, from Michael at Val5Links, MicroStrategy announced that it bought an additional 7,002 Bitcoin for $414.4 million. So MicroStrategy clearly bought the dip as well. At this rate, each BTC was bought for an average price of about $59.1 thousand, according to the announcement from CEO Michael Saylor. He added that the business intelligence firm currently holds 121,000 Bitcoin, which it acquired for a total of $3.57 billion, paying an average price of about $29,534 each. Previous purchases, while not buying as consistently as previously this year, MicroStrategy continues in earnest to pile onto its Bitcoin strategy when it does. Upon releasing its quarterly financial results last month, MicroStrategy revealed that it had increased its Bitcoin holdings in quarter 3 of 2021 by 8,957. At the time, Bitcoin's price was approximately $61,000 or $61,500 to get that correct. So the new addition has amounted to $550.85 million in USD. The company also went into detail regarding its corporate strategy. Okay, so they talk a little bit about that. I'll link this in the description if you're interested in the details. But I think the bigger picture, the overarching picture here is that, big business, institutional money flowing into Bitcoin. MicroStrategy, one of these firms piling into Bitcoin this year, and these guys are not the only ones. We've heard about institutions piling into crypto in 2020, and that has increased into 2021. You got to remember, the big guys, the guys at the top, they are seeing that the house of cards is about to topple over. And so they're looking for a hedge. They're looking at cryptocurrencies. They're looking at this new financial framework. I'm sure they realize central banks are moving towards CBDCs. So crypto is the future. Crypto is a hedge against inflation, against fiat currency, right? That's another part of this story. Supply chain shortages around the world and, the beer flu pandemic clearly has a lot to do with this. So institutional money pumping in, and that is giving us a very, very strong reason to take this seriously, this prolonged bull run theory. Not saying it's going to happen for sure. However, the stage is set for this to be a likely possibility. Now let's keep going, guys, because I also wanted to mention this tweet here from Rob Art. Rob Art has posted some great tweets. I'm going to get to a few more later on in this video. He says, if we set aside emotion and look at facts, while SEC news crashed XRP from 76 cents to 17 cents, it pumped from 17 cents to $1.96 during the lawsuit, guys. So let's also not forget that about XRP. XRP trading at about $1 right now as of the time of this recording. But Rob Art, and I mentioned this briefly in this morning's video. If you guys didn't catch this morning's video, I'll link it up here in the top right-hand corner. Let me just bring up the chart here. Okay, this crash really did bring XRP to its knees. Okay, this was around that time when we heard about that XRP, or rather the SEC announcing the XRP Ripple lawsuit, brought it down 78% all the way back to 17 cents, which essentially was the retracement level, that strong level of support that we saw back in March of 2020 before the crypto market really just kind of took off. So brought it right to its knees, okay? Black Swan, this was the Black Swan event, bringing it right back down to this base level of support, essentially erasing all these gains that we could have had. But then Rob says, from there though, it pumped from 17 cents to $1.96. Okay, in the midst of the lawsuit, and not only that, guys, in the midst of the most precarious part of the lawsuit, because at this point in time, I don't know if you guys remember, everybody was like, what the heck is going on here? Why are they suing them? We didn't have as much information as we do now, and so everybody was kind of scratching their heads, panicking, worrying. Yet, what happened? Institutional money, I'm sure institutions quietly were buying up XRP. Big players realizing and knowing XRP, central to finance, understanding the relationships that Ripple has been building over the last several years with central banks. And sure enough, the price pumped 1,050%, 1,049.08% to be exact, from the bottom here, 17 cents, all the way to $1.96. Then from there, the market has been essentially just kind of behaving the way it is behaving, similar to what the rest of the crypto market is doing. We saw that high. We saw Bitcoin top out there. Then we saw that decline at the end of the spring and into the summer. We have now seen that double bounce for XRP. Of course, traditionally, double bounces means the price will continue to move upwards, and sure enough, that is what we have seen. So back to Rob Art here. He continues by saying that's roughly a 1,100% pump, meaning the lawsuit is not stopping it from pumping hard again. So yes, we may have lost some profits because of this Black Swan event, but guys, this does not mean that XRP will not pump hard when the rest of the crypto market pumps. Let's not forget Bitcoin still kind of teetering up there. We have not seen that full cycle complete for Bitcoin. And, that's the okay case scenario, the good case scenario. The best case scenario is that Bitcoin will see a prolonged bull market and altcoins will follow with it. Not only that, XRP has the utility and of course the stage that has been set around the world, institutions getting into Bitcoin, getting into altcoins. And one thing I wanted to bring up here, even though I've just said Bitcoin, altcoins, this is what institutions are getting into. BondCrypt XRP posted this. Reports are now showing that institutional investors are actually abandoning Bitcoin for altcoins. So they are looking at Bitcoin as not necessarily going to yield the same returns that they were seeing back in 2020. And, maybe they were new to the game at that point. Now these institutions sounds like they are feeling more comfortable with alternative cryptocurrencies. So a report shows institutional investors are abandoning Bitcoin for altcoins. Institutional investors may have been increasing their bets in Bitcoin for a while now. Even big banks such as Morgan Stanley have introduced funds through which they provide their clients with exposures to the crypto market. Bitcoin has long been the digital asset of choice, of course, but now they're looking into altcoins. Bitcoin is losing steam. A new report from Crypto Compare shows that institutional interest in Bitcoin has dropped significantly in the month of November. Bitcoin assets under management, or AUM, took a hit as the digital asset recorded losses not seen since July. So we have seen less institutions getting into Bitcoin, realizing that this is likely close to the top. I mean, if they believe theory 1 of 2, they are likely believing that Bitcoin is close to the top, and that would mean a full Fibonacci to the 4.236, bringing Bitcoin only, how much more percent would we have if that were the case? Let me just zoom in here, show you guys. If we take it from today and bring it up, meaning they could only get maybe about another 25% out of the investment. So what are they doing? They are looking to alternative cryptocurrencies or altcoins. So altcoins are picking up the slack while Bitcoin suffered from low interest. Institutional investors seem to have found a new favorite in the market: altcoins, cryptocurrencies that are not Bitcoin, essentially. Trading volumes have plummeted across markets given how shaky the market has been. Along with Bitcoin trading volumes for all digital assets, they've dropped 13% to an average of about $732 million per day. However, these investors are now looking into altcoins like Ethereum. Some of the other ones they mention here are Litecoin and Solana. So those are just a few that this article has mentioned. And to support that story, guys, I saw another one from DJ Peter Vass. Europe welcomes 4 new crypto ETPs tracking Bitcoin, Ethereum, Cardano, etc. Now that institutional investors have settled into the cryptocurrency sphere, an increasing number of sophisticated investment products are being introduced into the market for their specific needs. In the absence of a legitimate market in the US, due to regulatory red tape, so Europe is taking advantage of the fact that the US has not seen clarity yet, the European market is now focusing on ETPs, which are exchange-traded products tied to cryptocurrencies. And so this is meant for investors wanting a broad exposure to the crypto market, with the fund tracking established digital assets that encompass 70% of the industry's total market cap. These include the top tokens, Bitcoin and Ethereum, along with leading altcoins like Litecoin, Bitcoin Cash, Cardano, Solana, and Polkadot. So not adding XRP in there, nevertheless, it is interesting to note that they are looking at some of the top cryptocurrencies for these ETPs, or exchange-traded products, as they're known. So there is some more information in this article if you care to read at your leisure. I will link this in the description of the video if you guys are interested. But I wanted to just thank DJ Peter Vass for pointing that out. But back to this, guys. This from Crypto Bull at Crypto Bull 2020. When XRP finally breaks out of this, everyone will love to buy this coin. Just you wait. So we are set up, guys. We are just set up now for that launch off. This is XRP on the daily. And, this structure right here is looking, to me at least, like a really, really good setup, similar to what we saw back in 2017. I have traditionally taken this bars pattern here and brought it over here to compare this structure to this structure. But even if you take this bars pattern and, it's here. I'm just going to extend it for you guys to show you what I'm seeing in the charts now. Okay, take a look at what we saw then. And if you extend it further, which here, this is a little bit unorthodox, but extend it further, take a look at how similar, right, this pattern is, the structure is, to the overall structure that we are seeing from 2018 into 2019. We are seeing that same type of structure in a lot of ways, just extended out, prolonged, okay? And structure is human psychology on the chart, essentially trading behaviors. So if we saw it in a smaller, shorter capacity in 2017, we are ultimately seeing the same thing, guys. The same setup, the same structure between 2018 and 2021, looking into the future. Ultimately, though, the most important part of this is this point here, blast off up into the stratosphere, and the question of, are we going to hit our targets or not? Another one from Rob Art here. We are currently 13 days into a new 70-day structure. XRP December or January. So he is retweeting out this tweet that he posted, I believe, a couple of weeks ago now, just demonstrating XRP structure timeframes. And so he's breaking it up into downtrends, uptrends, downtrends, uptrends. And I don't know if you guys can tell here, we're given about 70 days, okay? This is 69 days, this downtrend here. And then the uptrend was about 71 days. The next downtrend, 70 days. The uptrend, 76 days. This downtrend, 70 days. And now we are looking for that final push to the upside, 70 days he's assuming, which would bring us between December and January of 2022. And to his point here, as long as XRP doesn't lose structural support of anywhere between 86.75 cents or 75 to 86 cents, this is the scenario I see playing out. Take a look at those gains, guys. This was again back from 2017, 2018, and it would be off the charts if we saw that same setup play out in 2021 or early 2022. How high could the price go? Well, this, again, according to Rob Art, let me bring you back to the XRP chart, and let me take it off log scale for a second just to kind of give you guys that dramatic sense of where Rob is going with this. Visually, it's just way more dramatic when we look at it this way. Assuming that level we saw back in 2017 was the base, the bottom. What we saw from there to the top was an increase of over 700%, okay, from back in 2017. Over 700% would bring XRP price from here to here, okay, so that was 746%, give or take, 46%. So that was, here, let's just, 33%, 733%, okay? Looking at that top at 39 cents, 39.7, so about 40 cents, all the way to all-time high. On this chart, all-time high was $3.31, so we can see that top, 733%. Well, if we're looking at that same level of resistance, okay, from over here, this would be that level of resistance before we saw price move back down. And so if we took that same measured move, guys, take a look at where XRP could bring us. All right, I'm going to have to move the chart up here. What do we say? 733%. That's 300. Drag that down. Keep going up here. 500, 600. Not yet. 733%. And this, of course, looks more dramatic when you don't have it on log. Essentially, 733% could bring XRP price above the $10 to $15 level, guys, at $16.34. Of course, this is all within the range of where we are assuming XRP price could go next, past the full Fibonacci cycle, the 4.236, past this $13.53 mark. But we are in that range, guys. Remember, $10 to $15 was my estimate. If we see that measured move, similar to 2017, 2018, we could get beyond that. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.